let's give a breakdown of the market. So everybody realized that, the whole government breakdown, shutdown did not really affect the market in a negative way until like maybe a week ago. The oddest thing that really happened was the fact that people started looking at the Mag 7 and the whole tech sector and started like inferring that this was all a bubble. And it's so funny the way they sort of catastrophize all of this stuff. Everything, you've got a market that's been lifted by Mag 7 for 2.5 years, and then suddenly you have Palantir coming out, and you've got, with earnings that were great, and then the stock went down 8%, and then suddenly, there's a lot of this inference that this is all, that the data centers are not going to happen, and all this stuff, and they love just to catastrophize and sort of, and throw sort of a grenade into these things, which absolutely makes no sense. Obviously, the minute that the government decided to reopen, the market was up 105 handles on that first day. It was a little muted on day 2, and obviously, look, today you're going to see a little bit of profit taking too. Look, November is the month that is the most robust month seasonally of the year. We know that September and October tend to be weaker. This year they were not. And so some people feel that maybe there's going to be a little bit of a muted effect in November as we come into the holidays. All that being said, everyone needs to also realize that a lot of hedge funds and mutual funds and institutions close a lot of their funds at the end of October. And there's a little sort of labor because they don't look, they've locked in. At this point, these guys are up. If they're tracking the S&P, they're up anywhere from 10 to 15 to the S&P is up 70% for the year. So why would you want to risk, especially with the government shutdown and with, the Federal Reserve inferring that December's interest rate cut was not a surety. That was that odd thing that, that Jay Pow said at the minute at 2:30. We were on with David. We saw that. That was the moment that the market really sold off because a lot of these funds are positioning themselves in very interest rate sensitive portfolios. And so the minute he said, and everyone was counting on at least one more cut in December. And when he said a December cut is no longer a surety, my gut is that was him poking the bear. He's not gone up against the president at all. I think that was a poke. And so that was what sold off the market. So all that being said, net with 43 days of a government shutdown for the market not to respond negatively until the last few days, I think was, quite something. And obviously a lot of it was the Federal Reserve, the tech stocks being pulled down by all of this chatter, which I just think is a lot of baloney, because we know that when you've got all the top companies, many of them are not even in the AI space, committing hundreds of billions of dollars to data centers and to that whole sector, then this is by far no bubble. This is not, people are comparing this to 1929 and to 1995, the internet bubble. You guys were not around. I was not here for the 1929 crash, even though some people think I was. So let's just be clear that the market seems super, super solid. We are in November, traditionally a good month. We are going to get another cut, at least as far as I can see. The probability is up to about 67% for another cut in December. But you're going to see a lot of rotation. A lot of people are going out of some overperformers and into some underperformers. We've seen the Russell be bobbed around, a lot of big volume there. Net, at the end of the day, the volatility is back. David has said that we've got 40-something days out of 45 where we've been successful trading. And so, we beg everyone to sort of hold on to the discipline and consistency rule and have their stop orders on everything, because we are in a volatile mode. We also are a tweet away from crazy town. That's the bottom line. That's the nature of the markets right now. But November and December tend to be super volatile months, right? But historically, they tend to be up.